Hello, my name is Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. And here is your weekly technical analysis of LME 3-month copper, aluminium and lead. LME 3-month copper. So it is now 6 weeks after the market created a weekly key reversal down, as well as during that week that happened over Wednesday, Thursday and Friday, a 3-day bearish stick sandwich pattern. 5 weeks ago we saw the follow-on lower to these two patterns, with prices punching down through the lowest and arguably the weakest of the three recent congestion zones, the one between 91.83 to 91.56. Prices dropped down as far as below the 50% Fibonacci line of July 22 to May 2023 move at 90.29, where they have now gotten somewhat stuck. In part, I think it is due to this 50% Fibonacci line, but I also would include just below the 50% Fibonacci line the flat but important extension to the upper trend line highlighted in dark blue of the June to August 2023 ascending triangle, currently at 87.94. This proved itself earlier this year as the support that turned the market higher back in early August. Now, since last time when I spoke, we have also seen prices rise and get batted down last week by the very flatlining mauve medium moving average, currently at 93.17, which has defined the topside resistance, in addition to the previously mentioned congestion bands overhead. In the slightly bigger picture, the October to date actions had created a small bearish descending scallop pattern. This gave a primary target down in the 92.02 zone, which has been achieved, and a secondary hard to reach target X down in the 87.50 zone, around the lows of August and just underneath the dark blue neckline. So far we really haven't attempted a big move lower, but then we really haven't attempted a big move higher either. However, just in case we do reach there, the next support below that is the small congestion band 86.65 to 86.86, made up from the 50% Fibonacci line of the October 20 to May 23 move at 86.86 and the April 2012 high at 86.65. Meanwhile, topside, we have the off-mentioned congestion area between 93.95 to 96.06, whilst below we have, as I say, that congestion band. I'd also like to point out a newish feature, and that is to possibly regard the early November to date action as a possible bearish halfway hesitation, with potential down as far as just below 8,500. This hasn't as yet been triggered, so there is no definitive targeting, but there is the possibility there for such a move. Finally, the slowly rising long moving average, currently 94.84, together with the short moving average, currently 90.76, and the mauve medium moving average, created a bow tie formation 5 weekends ago. I have been clear in saying this bow tie formation is not perfect. For example, the long moving average is still heading slightly higher, and the medium and short moving averages are both heading slightly lower. But the moving averages, well, they are in the right order, so I'd pay attention to it. Thus, the immediate direction of the moving averages had been mainly bearish, though not overwhelmingly so, which I suppose sort of ties in with the market. And then to look at the count. Well, by this I mean that approximately 15 to 20 sessions after the crossovers, we should have seen some volatility, so that just approximately between the 9th to the 16th of December. We did not see any excessive volatility, but we did see that the attempt higher last week that was swiftly batted down, and I'll put that down to the volatility that was expected. As I said 2 weeks ago, and I quote, "Please be aware this is an imperfect bow tie formation." Finally, 2 weeks ago we had a weekly key reversal up. This saw an immediate follow-on higher, also last week, so it's combined together, those two things. But it has not been sustained, though it does somewhat counter the weekly key reversal down made 6 weeks ago. LME 3-month aluminium. The lack of a weekly key reversal here 6 weeks ago, after a tumultuous week in many markets, including here, seeing instead here a settling for a lesser outside week pattern, fed through to the big move down and big move up 5 weeks ago that saw prices range widely, but ultimately at the end of it, go nowhere. However, it did manage to achieve one thing, and that was a longer term monthly key reversal down in November, and we have sort of been slowly, steadily following on lower from that ever since. Up until that point, in the larger overall picture, prices had been held within a number of patterns, mainly bullish. Now, in the big picture, We have the purple tines of the mid-December 2023 to late July this year bullish Andrews pitchfork. We're currently close to the lower tine, which is below, currently at 24.99. We also had for the same time period a bright red shallowly bullish shift pitchfork. The market today is just below the slowly rising middle tine, currently 25.84. Finally, sitting closer to home, we are now below the dark blue lower tine, currently at 26.18, of the breached and now possibly broken late July to early September bullish shift pitchfork. I said about this lower tine 2 weeks ago, and I quote, "This lower tine intersects with the bright red middle tine this week, and on the surface that might indicate a doubling of the bullish incentive, but it also, and this is the key point I want to stress to you, what I said at the time, but it also the opportunity for the bears out there to smash two supports with one hit, should they choose to. They seem to be in no hurry to do so right now," end of quote. Well, they were certainly in no hurry, as it took until this week to have a single close below the bright red middle tine. But it does look like a significant close below it and a further move lower today. The market is now testing the mauve medium moving average below, currently at 25.31. We're not too far above the gold long moving average, currently at 25.10. This has given me a chance to view the action since mid-September as a possible rounded top, with a big cleft in the middle, and with the neckline for such a pattern around the 24.85 zone. I've also considered the idea of a large roof pattern, even a diamond, but I've rejected those for now. Hence, pay special attention to what happens at the purple lower tine, especially as below this we have the 50% Fibonacci line of the December 23 to May 24 move at 24.54, though I'm not sure how good that will be. And we next have to have support at the 23.40 to 23.87 zone with two necklines running through there. LME 3-month lead. 5 weeks ago I detailed a number of supports below the market at the time, as well as a resultant move that is still all very significant now, and I quote, "Some of the supports below, some of them well below, are Fibonacci based, congestion and otherwise, between 1994 to 2002, followed by the June 23 low at 1976, which looked, how shall I put it, less interesting, then the 2024 low in August at 1917, which I suspect is a function of the nearby 2021 low at 1908. There's also a neckline extension, currently at 1929, that is at the moment, of the July 23 to February 24 head and shoulders continuation pattern. The reason I mention these supports below is that they contributed in eroding the decline we saw in early to mid-September, enough that it was stopped and turned back upwards." End of quote. These supports also eroded and turned the market back up in the middle of November, with prices peaking 2 weeks ago just under the flatlining long moving average, currently at 21.13. This pullback up and subsequent decline we saw last week and this week affected what I had set out as a possibility for the move lower in November, and I quote, "That is not all, as if we do get down there and continue, then please be on the watch out for 2 bearish and 1 bullish possibilities. The action from August to date could be seen as a possible large bearish cat's ears pattern, or an even larger early July to date bearish halfway citation. Alternatively, it could then be an opportunity for the mid-July to date triple bottom." End of quote. In the end, the idea of a bearish cat's ears pattern or a triple bottom has come and passed, and not happened, and I will dismiss such notations by the next commentary. Instead, we are now setting up for the opportunity since early August to date to possibly be a quad bottom, but, and it is an important but we're also setting up to have a possible head and shoulders pattern, a more likely pattern in my eyes right now. Now, the head and shoulders pattern is not in the right place. It's not at the top of the market, but then it could be an unusual situation where we have a head and shoulders as a continuation pattern looking lower as well. That has happened, rare, but it has happened. I suspect a lot will depend on what the market does at the neckline extension below, should we get down there. This leads me to my final pattern, which has not as yet happened, but which may very well do so in the next few days. We are seemingly setting up for a possible bow tie formation of the short moving average, currently at 20.45, the mauve medium moving average, currently 20.46, and the green short medium moving average, currently 20.47. We will know in the next few days, I hope, if this comes about or not. Thank you for listening. This weekly broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and at the back of this broadcast. Copyright is Eddie Tofpik and ADM Investor Service International Limited. And here comes the final important bit.